Hello, everybody. Greetings from the APEC Secretariat. Happy that you can all join us. This is a timely release of a very important report. As Michael said, the ministers will be meeting next week, and there will be good background information for them as they talk about what we can do as a region towards COVID recovery specifically, as well as how the APEC member economies can contribute to the work that's going on at the WTO, the World Trade Organization. The ministers, when they meet, the first part of the meeting is especially significant because they will be having a dialogue with the APEC Business Advisory Council. The APEC is a key member, a key party to this engagement of the ministers. And so whatever comes through from that dialogue will then flow through to when the ministers themselves meet and discuss COVID recovery measures. Towards the end of the ministers' meeting, they will also be presented with the winner of the App Challenge. And the App Challenge is where we as APEC engage with the youth in giving them an opportunity to have their voices heard through their work in the digital and gig sphere. So this is a very important time for us, and we're all excited to hear about what the ministers will do, as we plan for COVID recovery, as we plan to work to engage and contribute to the WTO. So I'm looking forward also to this very important briefing from Dr. Dennis Hu and Dr. Ahmad of the Policy Support Unit. And just on that note, the Policy Support Unit has come up with some really very, very useful and meaningful work over the year. And only last week, they launched an important document, a policy brief on promoting trade vaccines and related supplies and equipment. This also will add to the work and input into the discussions, both with the APEC Business Advisory Council, as well among the ministers themselves. So I hope this gives us a perspective of the work that's going on in APEC. There is much that has been done by the Policy Support Unit to facilitate, to advise, to provide policy briefs on how we as a region can look at our policies as we focus on COVID recovery. So on that note, I thank you all and I look forward to the briefing from both Dennis and Ahmad.
Yeah, right. So what I'd like to do for the next couple of minutes is to share with you our latest report on the APEC Regional Trends Analysis. If you're familiar with this research, our flagship publication, it's divided into two parts. So what I'll do is to focus on the economic outlook for the APAC region, and Dr. Ahmad will be talking about our theme chapter for this issue, which will be on strengthening supply chains. All right, we can see from this particular chart here that we essentially saw the full impact of the COVID-19 pandemic, particularly in the first half of 2020 of last year, with lockdowns and travel restrictions as well as quarantines. But towards the second half of 2020, we begin to see, due to relaxations of these restrictions as well as quarantines and other restrictive measures, that the economy was beginning to pick up. So we see for the full year of 2020, a softer contraction of about minus 1.9%, which translates to about $1.4 trillion of US dollars of output losses. And that's a lot, it's a lot softer than our earlier forecast back in May 2020, which we were looking at about minus 2.7%. Moving forward for this year and the next couple of years, we're seeing a much more stronger recovery in the APAC region. We're looking at 6.3% in 2021, which roughly translates to about $5 trillion of output in output value terms, with a much more moderate pace but sustainable growth over the next 2 years of about 4.4% in 2022 and 3.4% in 2023. we know that there's a lot more optimism this year than last year, and we partly due to the development and production of various types of vaccines that didn't exist last year around this time. We've also seen a lot of the fiscal support as well as monetary policy supports to businesses as well as to households that's helped to keep many companies afloat, and that's basically has kicked in. So we see a lot of that pent up demand as lockdowns were being relaxed, as well as other restrictive measures. I think it's also an interesting observation to make is that in many ways, the forecast that you see here for the next couple of years is very, very close to our forecast that we made last year back in our ASA report back in May 2020. And that seems to suggest that the region as a whole was able to implement effective measures to counter the negative fallout from the COVID-19 pandemic. As well as, although we are cautiously optimistic about the economic outlook, there are a number of uncertainties and downside risks that needs to be taken into account, and that may have an impact on economic growth. One, of course, is that we are seeing resurgence of infections in different parts of the world, as well as mutations that could delay the reopening of businesses as well as borders. And this kind of start sort of economic reopening could have an impact on the economic forecast as we move forwards. We also see divergence speeds and strengths of economic recovery, as I mentioned, across the various APEC economies, and that's largely due to that disparity in terms of getting access to vaccines. We know that a large number of APEC economies will be able to achieve widespread immunization by the middle of 2022. Some will be able to achieve that in 2021. But however, confirmed vaccine purchases do vary across APEC economies. So that results in that kind of wide disparity in terms of vaccination coverage, from as low as 40% of the population to almost 800% of the population. In other words, there are some economies who have too much vaccines and others which have very little or not enough. So getting access and a much more equitable distribution of these types of vaccines to counter COVID-19 would be quite crucial. We also seen many job losses over the year. I think ILO in our earlier report talked about the Asia Pacific region. Something like 81 million jobs were lost due to COVID-19 last year. And also very temporary business closures do fuel cautious spending because of the concerns of job as well as wage insecurity. We also seen weaknesses in investments and foreign investments, particularly more worrying, particularly in multinationals committing to capital for greenfield projects. And greenfield projects are important, particularly for developing economies, as they're an important source of technology transfer as well as skills training. So as we move forward, I think what's imperative is to ensure that no one is left behind. It's important to contain the spread of COVID-19 and its various types of variants or mutations. So it's important to continue efforts at contact tracing, testing, isolating and treating patients. These all will need to continue in order to contain the pandemic. We also need to have continued government support for those households and businesses that's been affected, particularly as we move forward, but in many sense, much more targeted government support rather than what we saw last year, which was much more widespread, just to ensure that all businesses are kept as much as possible afloat. And higher public health spending. In our earlier policy brief that we did last year, we found that pre-COVID, the percentage of GDP spending for in the APEC region for healthcare was below 5%. So that has an impact on the capacity for healthcare workers, hospitals, and others to be able to cope with a resurgence of infections, which we're seeing right now. It's also important to relearn some of the old lessons as we move towards a new post-COVID future. Important to look at allocating resources to improve social outcomes, social protection, investing in human capital development, particularly in higher funding for education, retraining, and reskilling of programs. And that's also related to the third point of we're seeing that increase move and acceleration to digital transformation of industries, and ensuring that as we come up with new businesses or existing businesses are being increasingly digitized, that workers are being able to be reskilled to be able to adapt in these new sectors. Again, as we move towards the future, I think it's important for us to look at some of the issues, particularly in protecting the environment. We know that unsustainable practices such as deforestation as well as pollution has led to habitat losses for wildlife, and that has resulted in increased contact between humans and animals, giving rise to many types of zoonotic diseases such as COVID-19. We can apply a combination of different types of environmental policies, for example, applying carbon taxes to rein in the use of coal or other costly fuels, while using parts of those proceeds to fund green research. Promoting green investments and technology will be important as we move forward. I guess the last point is which is the role for APEC and in terms of regional cooperation, is to see how, as a region, we can ensure equitable access to vaccines will be quite important. As Rebecca mentioned, we did come out just recently with a policy brief looking at the promotion of trade in vaccines and related products. And what we find is that production levels continues to be still short, still lacking in terms of covering the total population. We're looking at something like, in order to vaccinate the entire population, we're looking at over 14 billion doses of vaccines, of which 5.2 billion doses are required in the APEC region. And that's quite a huge challenge. I mean, in our policy brief, we look at just the global market of all types of vaccines that covers all types of diseases in 2019 was only equal to about 5.5 billion doses. So it's a huge challenge trying to rank up crank up production of these vaccines. We also need to ensure and guarantee free and faster flows of COVID-19 vaccines, as well as related medical products. This is something that's being discussed right now in APEC, as well as to share related expertise and best practices in trying to contain the pandemic, whether it's through contact tracing or the applications of different kinds of digital technology to in different types of health protocols, travel corridors, as well as mentioned earlier on contact tracing. We need to commit to a stronger regional economic recovery that is durable, inclusive, and sustainable. And we can start off that with the implementation of the Putrajaya Vision 2040, which was launched last year. And this year, senior officials will be meeting next week to discuss and to flesh out the implementation plan for the Putrajaya Vision 2040. And as we can see here, these are some of the key elements in that Putrajaya vision. And I think what's important to stress here as we move forward is that we need to take a much more cutting approach. It involves different committees and working groups for us to try to build back better and create a much more prosperous and resilient Asia-Pacific community. And I'll stop here. Thank you.
Thank you, Dennis, for those insights. It seems like there's still room for some cautious optimism going ahead. However, the pandemic is still causing some uncertainty. What we do know is that members will be working together over the next weeks and months to come together to help stem job losses, resume travel, and put in place a better system for recovery to build back better. Let me remind everyone to please send your questions through the Q&A tool at the bottom of the screen. There will be time for discussion after the presentations. With that, let's hear from Dr. Ahmad, who is a senior analyst with the APEC Policy Support Unit. He'll be briefing us on supply chain resiliency and how we can rebuild our global trade. Dr. Ahmad?
Thank you, Michael. Good morning, everyone. Good morning, Dr. Rebecca, Dr. Hugh. I'll try to share my slide now. Okay, the topic that I'm going to talk about is on the supply chains, most on the resiliency of supply chain related to the global trade recovery. So, as you know, the early disruption in Chinese export and the subsequent spread of the virus to other major manufacturing hubs like the United States and Japan has led to even more supply chain disruption. So just to note that US exports dropped by 13% and Japan export fell by more than 9% in 2020 compared to 2019. In the first 4 months of 2020 alone, the APEC region saw a 6.3% decrease in exports and a 5.5% decrease in imports compared to 2019. The vulnerabilities of the electronics industry were late start because of its lean production methods, which meant low inventory levels and limited alternative sources for components. For example, disruptions in the semiconductor chip industry during late 2020 and early 2021 show that it is the weakest link in automobile supply chains, which may cost the global automotive industry up to $60.6 billion in revenue in 2021. Perhaps more urgently, as Dennis also highlighted, supply chain disruption have impeded COVID-19 response and mitigation measures. Disruptions in the pharmaceutical industry meant that medications and medical equipment could not reach where they were needed the most. For example, lockdowns in China meant that pharmaceutical raw materials could not reach India, the top producer of medicines in the world, which meant that drugs needed for managing the milder symptoms of COVID-19 and for treatment trials could not reach patients. And higher demand, factory shutdowns, and just-in-time inventory system has led to global shortages of personal protective equipment or PPE, such as surgical masks and biohazard suits, which resulted in healthcare workers scrambling for supplies or improvising creative protection options. While just-in-time measures were effective in improving inventory management efficiency and cutting costs in PPE supply chains, they also increased their vulnerability to disruptions. More recently, the impact of supply chain disruptions become evident in the delivery of vaccines. So in short, a global supply chain were disrupted through this ripple effect because of the close connection among suppliers. Some products sourced from manufacturing hubs are no longer being produced or exported at the same rate. This highlights the need to build more resilience into the global supply chain. I mentioned earlier, APEC represents 60% of global manufacturing hubs. Over the past 2 decades, China's share in global manufacturing value added has tripled from 10% in 2000 to 32% in 2020, showing its growing importance as a manufacturing hub. China's lockdown in early 2020 has had a greater impact on global manufacturing than the severe acute respiratory syndrome or SARS epidemic 18 years earlier. In the intervening years, as reflected in the rise in China's share of global manufacturing value added, many industries have become heavily reliant on inputs and finished products from China. So global supply chains actually, they are results of fundamental factors. So they represent the most efficient connection with the greatest productivity gains. And the reorganization of GVCs has been enabled by the digital revolution, which have been able to lower costs and improve the quality of information and communication technology, which allow companies to coordinate and supervise complex production activities from a distance while still ensuring the quality of their products. This coincided with a period of pro-globalization policies, leading to liberalization of trade and cross-border investment. And even now, actually, according to the data from OECD, around 70% of international trade involves GVCs, which actually another name for trade of intermediate products, while the World Bank estimates that GVCs account for almost 50% of global trade. So actually, one might say that altering participation within global supply chains to accommodate greater agility and resilience could work against the economic efficiency, since you already have a very efficient structure to begin with, and suddenly you want to change how it operates. It may have some cost considerations that I guess in the end the customers may need to pay the higher price of the product. So this slide is about the rise of global value chain. If you note, starting from the 1990s, it has been increasing quite steeply, and it's sort of milding down around after the global financial crisis in 2008 or 2009. So GVC links are formed when economies import components or export intermediate inputs to their trading partners in order to produce the final goods. Just to give an example, at the sectoral level, the 5 largest GVC trades occur in textiles and wearing apparel, metal products, electrical and machinery, transport equipment, and financial intermediation and business activities. So these products or commodities actually also have the largest gross export values and are very important for many emerging economies. And the current wave of globalization has allowed global supply chains to proliferate and provide economic benefits to both developing and developed economies. By integrating with GVC's business in developed economies, they can outsource production to economies with cheaper input costs for labor or raw materials. Firms in developing economies are able also to take advantage of foreign industrial bases rather than developing their entire industries from scratch. Additionally, trading partners can benefit from access to foreign markets, innovations, technologies, and knowledge sharing. Therefore, global supply chains have been formed based on business linkages that would provide the most cost-efficient outcome so that business can position themselves competitively in the global markets. This slide is about the Herfindahl-Hirschman Index, which measures the diversification of trade values across location. So it shows similar with the earlier slide that as GVCs expand, actually the concentration has been reduced. But on the other hand, on certain products, it actually has increased. And in fact, it has increased rather steeply for example, for electronics products and for parts and components. So concentration in export markets introduce inflexibilities and may expose supply chain to greater risk of shocks and disruptions. Indeed, the disruption seen in the electronics sector during the pandemic could very well be the result of their increased export market concentration. The market concentration index for electronics exports as well as their parts and components has risen significantly in comparison to the increase in the index for total manufactured goods. This is of concern since GVC trade in electrical and machinery accounts for almost 50% of total GVC trade in APEC. To give an example, the disruption caused by Tohoku earthquake in 2011 sent the global semiconductor industry on a long nine-month path to recovery. This trend also illustrates a salient feature of today's GVCs, which is the pursuit of efficiency to around a few hubs. So it represents like a hub and spoke pattern from these manufacturing hubs. However, such concentration actually have a risk of reduced resiliency. Now let's try to define what a resilient supply chain is. Back in 2014, we have the following definition of supply chain, which is it has to be robust. So a resilient supply chain should be strong enough to withstand normal shocks and changes. Robust supply chain should not be easily disrupted in the first place. Reliable transportation, power, and ICT infrastructures are the necessary condition for establishing a robust supply chain. Secondly, it needs to be agile. So agile supply chains could be defined from their ability to rapidly and cost effectively respond to change as enabled through the seamless flow of information. Speed is crucial in improving or building supply chain resilience. Agility is particularly important during recovery after a certain disaster, as resilient supply chain should be able to recover quickly from a disruption. The longer time taken to recover, the more damages could occur, and the more complex is the situation to be resolved. The third element is on flexibility. So resiliency in a supply chain could be improved by having more options and alternatives during normal times and during recovery. Multiple suppliers will provide lead firms more options to anticipate or react to changes. Single sourcing, where one supplier is responsible for the supply of a specific item, maybe could be an advantage from a cost and perspective, but it's actually dangerous in terms of resilience. Lastly, a resilient supply chain should have some element of redundancy. So to maintain agility and quick recovery, firms and governments may need redundancy or surplus activity implanted in the systems. This could be in the form of buffer stocks, spare budget for emergency purposes, and a thorough preparation of business continuity planning strategy. This concept has been discussed in the earlier section more or less. So for example, the ability to quickly recover from shock is mostly about trade recovery. Recent findings from the World Bank suggest that while goods trade fell more rapidly during COVID-19 than during the global financial crisis in 2008-29, a quicker and smoother recovery during the pandemic may have been facilitated by improved GVC resilience. So basically, greater GVC concentration has been blamed for vulnerabilities, but I think the real issue is about inattention to long-term resilience in pursuit of short-term profits. And resilience is not a cost-free endeavor. It comes with hard choices and trade-offs. Yeah. And measures to strengthen resilience, such as diversification, could incur higher trade costs. So there are, given the substantial benefits from incorporating resilience and the urgency brought about by COVID-19 disruption, business have been considering the following possible adjustment to their supply chain. The first that most often mentioned is about reshoring and nearshoring. So it's about reconfiguring supply chains to another competitive location, closer to markets or headquarters for easier management. So this strategy would result in a more regional supply chains for easier management. And the second that's being mentioned quite often is on the just-in-case inventory management. So resilience can be built into supply chains by building redundancies, which is holding precautionary stocks of inputs and finished products, or by diversifying suppliers. And this will help firms some extra time to plan their recovery when hit by disruption. The last one that's being often mentioned is on improving visibility, which is providing end-to-end visibility to allow companies to anticipate shifts in demand and react with flexibility. It's often being mentioned how the lead firm in a global value chain, actually, they have a very limited knowledge of their suppliers, and they probably only know the first tier or the second tier of the suppliers, but they are basically blind with the rest of these suppliers. And better supply chain visibility is expected to result in 20 to 25% cost savings and overall improved levels of services. Now, as I mentioned earlier, investing in supply chain resilience is not free. So large premeditated investments may be needed to incorporate some of the resilience improving changes into existing global supply chains. These strategies could include improving problem identification within supply chains and increasing their flexibility and security. These strategy options are briefly mentioned in this table. So firms may choose their investment strategy based on several factors, such as risk exposure, risk appetite, as well as competition strategy. Done correctly, investments in supply chain resilience could deliver 15 to 25% improvement in plant output and 20 to 30% increase in customer satisfaction. In fact, well, oddly enough, yeah, I guess since we have COVID and the risks have increased, so this investment in supply chain resilience will be able to bring higher returns. So we are hoping, obviously, we are hoping that companies will make more investments in supply chain resilience in order to improve their business. So we have talked a lot about, what business can do to improve their supply chain. Actually, there are also a lot that governments can do. So I listed 4 examples here that government can promote digitalization and supply chain feasibility. So digitalization could contribute to supply chain feasibility through platforms that aid in online and real-time monitoring and transparency. Obviously, this kind of capability will need significant investment in ICT infrastructure. The second is for governments to continue improving trade facilitation. Trade facilitation efforts and measures need to be improved, particularly in relation to managing the flows of essential goods, such as food and medical products. Also, structural reform efforts is also very important in order to develop a predictable, consistent, and transparent regulatory environment to put firms at ease to adjust, especially during these lockdowns. And I guess there is sometimes the private sector have complained how they are confused with the kind of policies that some governments have applied, which is understandable since the spread of the virus seems also been evolved rather erratically these past few weeks. Lastly, governments will need to enhance regional cooperation on trade, connectivity, and economic openness. There is a need to maintain commitments to open trade policies and to avoid discriminatory and trade restrictive measures. I think that is my last slide. Thank you very much for your kind attention. Thank you, Michael.
Thank you, Dr. Ahmad, for that comprehensive presentation. I'd like to ask the panelists if they have any closing remarks before we sign off. Dr. Ahmad?
Okay. Yeah, I guess on the FTA part, I think part of the challenge of FTAs is how do they encourage SMEs to participate. I think FTAs are being regularly criticized for promoting interests of large firms. So I think the challenge for ASEP is how do they actually resolve the high trade cost barriers that faced by SMEs. Since I guess so far it's mentioned how trade has been dominated by superstar firms, and so hopefully the SME chapters in this new FTA could address the recurring trade costs and in addition to the market entry barriers. Thank you.
Just to say that, to thank everybody for spending the time with us, and also to say that during this time, it's more important than ever for us to work as a group, and therefore the relevance of organizations such as APEC. International organizations have a key role because no one can go it alone in this context.
Maybe I can just add, Michael, that the Policy Support Unit has been, I think we've been very productive over the last year or so. Take a look at our policy reports and studies. We've done a lot of work looking at COVID-19 and in various, looking at different aspects. So please do take a look at our publication list.
Yeah, and if I can do a plug, Michael, for the upcoming web page that we're having, where we're compiling all the initiatives that APEC has taken over the last year on COVID-19 alone, what we have done as a grouping to help each other recover from COVID-19, the various guidelines, information, data that's out that we've put together, including the PSU studies as well.
Certainly there's been no rest for the weary during this pandemic, and I think we've all really come together to address these issues. Thank you very much to all the speakers for briefing us, to your excellencies, ladies and gentlemen, for taking the time to join us today. Together we can advance free trade for Asia-Pacific prosperity. Take care, stay safe, get vaccinated, and we'll see you soon. Thank you so much.
Thank you, Michael. Thank you. Thank you, Ahmad and Dennis. Excellent.
Thank you, Dr. Rebecca. Thank you,
Terima
Dennis.
kasih. Yeah.
Terima kasih.